Bismillah. Day by day and in every way, I'm getting better and better. Let's talk about it. Going to review price action on the ES chart. Not sure if I'm going to get into the specifics for the day or not, but we can go through what we can go through. I want to try to keep this as short and sweet as possible and as relevant to my trading strategy as possible. So whatever, right? So yeah, today it was 8:30 unemployment claims. So again, may not get into the specifics of the day. Here we have a weekly chart. Black candles denote down close candles, as you can tell. Green candles are up close candles, so bullish candles. We can talk about the weekly. No, we're not going to talk about it. Just going to throw that out there. All right. So anyway, so breaking market structure, retrace into an imbalance, take off. So you have internal range liquidity, this fair value gap targeting external range liquidity, this swing high here. This swing high here. So then we have the market seeking internal range liquidity again after running this big bull bar or rebalancing this bull bar. So you have an immediate rebalance as a PD array has a reason to seek higher prices. You can see price kind of dip down, close, open, dip down, went higher, targeting this swing high. Right. So that's what we have. Swing high, swing high, swing high. We also have, so again, internal range liquidity, external range liquidity. Market seeking what? Internal range liquidity from here. Stab down into this order block. To stab down into the order block. Now we're seeking this swing high here. Swing high is a candle with a high with a lower high on both sides of it. Swing low is it's a low with a higher low on both sides of it. All right, so price saw internal range liquidity in the form of this order block, indicating the moment it broke above these two down close candles, became an order block. Retracement into that, and again targeting buy side liquidity here, or this swing high. Right, so you can say the previous week, shallow run above this swing high, pull back into this range here, and then took out these relative equal highs on these two candles. Boom, pull back. That's actually not what I wanted to discuss, but it's relevant information or good information still in my approach to the market. So that's a volume imbalance. I just highlighted it. Guess I wanted to. Let's make sure these kind of show up on the other time frames. Okay. All right. From here, weekly. Honestly, we can do the daily. But I want to do the 4-hour chart. You can do that on your own time if you like. But so we kind of saw this on, like, it's a big imbalance on this time frame here, and it's holding above the midway point, consequent encroachment, right? You can see it here, stab down, respecting the high of the fair value gap. You can see it all over here. But guess what? Right? Guess what? This is an optimal trade entry. Like if you look for, let's say you haven't, all right, I'm gonna fine tune it here. All right, so let's delete it. Should I delete it? Let's delete it. I'm gonna delete it, right? But it's still like relevant, right? Watch. Now, do you see any imbalance? You could have left it. We can leave it. Let's bring it back. And then let's just act like we didn't see any of this, right? Obviously we did. We're not gonna be like blind in the market. My point is, let's see what inefficiency did price react to in this price leg? Like whatever inefficiency you see. Me, I love inverted fair value gaps. You can kind of say this one here, whatever. I'm not gonna go that far back. What I want to say is, where do you see price reacting to right here? Like before this price action happened. Yeah, I'm going to just highlight it, right? So here to here, right? Why? Because how does arrow stuff work? Let's see. Because you have price, let's take the magnet off. Have price reacting here. Have price reacting here. Have price reacting here. All right, that's what I mean by where do you see price engaging with here, right? So that's a weekly fair value gap, a weekly imbalance that readjusted to the 4-hour time frame. And look, let me stop. It's not that exciting. It's exciting to me though, because it's really like what are we doing here? What are we doing? Are we making our life difficult? And these are still those weekly levels, but you can adjust this one too, right? Adjust this one to right here. So again, at the time you drew that weekly one, probably said, that ain't doing nothing, but is it doing something here? Doing something on this time frame? Gave us opportunities. Just readjusting it. It may not have been relevant on the weekly time frame, but it's sure enough is, or even in existence on the weekly time frame. And like if you go back to the weekly, it's probably not even right, but it's a gap up still. You can still take advantage from this candle's close to this candle's open. It's a gap up, so yeah, it's relevant, right? It's relevant, and you can see the opportunities. And one thing I wanted to highlight here, which I didn't want to highlight it right here, I wanted to highlight it on that 4-hour readjusted weekly fair value gap that we just adjusted, but I'm gonna highlight this one here. One price like stabs down. Obviously this is the entry. If you saw it, this would be an entry too, but this is the break in market structure and the retracement into this order block. Or if you don't see the order block, then this is my favorite OTEs. That's what I first anyway, it's when I first found valuable in ICT trading. Not necessarily valuable, but the first approach that I was made aware of that resonated with me. How about that? So yeah, here's that entry. Here's like this as a higher time frame key level, right? This, I'm saying level. I'm not gonna say zone. I'm gonna call it what it is. It's an imbalance, right? Or an inefficiency. Just the low and the high created around that, looking for an optimal trade entry from there. Reason to go long. Right? Let's where's the detailed version. Time frame is this 4 hour. All right, so you have, I call it alternate. This is the optimal trade entry, and these are two alternates. If you are like fearful you may miss the entry, then yeah, you're going to do the 61.8, and that's what that says there. First target, first profit scaling, target 1, target 2, and 1 standard deviation. So let me pull that back over here. I'm eyeballing it. It's probably a little bit like a tick off or tick, or it could be right in the exact, who knows. But yeah, right. And so I wanted to highlight that optimal trade entry longs. I'm not going to leave that on there like that. Let's see, which one did I use? Let's just do that. Right, I don't need all the words, but let's go back to the one that I wanted that was of interest to me. Right, it's the same thing here. Optimal trade entry here. This again, the swing low, swing high, you could have got in here, but it's probably not an optimal trade entry at that point. So let's see. Did it go? It's not an optimal trade entry, but a different model says that if price goes into an inefficiency below 50% of the range, then that's a reason to go long. But we're gonna focus on the strategy, on what we do, right? Don't worry about what they do. Worry about what we do, or what I do. Like mind my business. Mind your business. Mind your business. All right. So we got this swing low, this swing high around this inefficiency that we see price again was reacting to. And again, I eyeballed it, so it could be a little off. But and I'm using this swing high. And I'm using this swing low. Right? Optimum trade entry, multiple opportunities to go long. Same situation. Same situation. All right, using the standard deviations. How many? So, and then we have a return back to this same key level again. And we can continue. We can continue using this swing low, because it's this swing low and this swing high, and we have another retracement. Optimal trade entry, beautiful. And it just goes on. Negative 62% reason to it's target 2. All right, and then we have, yeah, anyway, that's what I really wanted to discuss. That's one point I wanted to mention that Justin, but this is what kind of saw that. And then I was like, yo, what did I just see? What did I just see? Let's see. I noticed, where is that at? Notice this right here, right? Notice this right here, right? Let's copy that. Just throw this right on the chart, man. Where art thou? Do you see this on the chart? Do you? Do you see this anywhere? Is that hard? All right. There's multiple of these on the chart, right? There's also multiple of these on the chart, but this buy model is relevant right now. Come on, man. You're not working right. What are you doing? Anyway. Yep. Frozen blood. Here we go. Yeah, I talk to myself. Yeah. All right, let's close that. Guess we lagging, right? Let's take that off. We're really not gonna get into this, but you can. Am I tripping? I'm not tripping. I'm talking like this on purpose. Like I like saying like ICT always says, is that what he says? Was that hard? Was that hard? I just find that to be like, I hear him like talking in my ear. Is that hard? Like when I'm like over complicating something, I hear him in my ear saying, is that hard? Pause. I am from the city. I normally don't say pause, but that sounds crazy. But anyway, pause. Bring forward. Kind of wanted to make this like in the background, but that is it. That's this also, right? Consolidation, manipulation, distribution, low risk buy, right? Where's the pathway? Right? Consolidation. What is that doing? Consolidation, manipulation, back below these lows, distribution, low risk buy, and then boom. That is this. That's also this as well. I'm sure. Trey probably like, I didn't really go below these lows. Okay, let's see. Did we do it now? All right, that's saying keto. But did it happen? Consolidation, manipulation beneath the low, distribution, low risk buy. Boom. Right. All right. So that's the divergence between asset classes, right? They should be running in tandem, right? Or closely related. And for that reason, we can also see right? No? All right, whatever. All right, so we have that. Consolidation, manipulation, distribution, low risk buy. Yeah, I took this from her page. Her rock Twitter. She's good money. Smart money reversal right here below the lows. Push higher. There's a lot going on here, but right. So I just kind of wanted to highlight that in order to, like, this is part of your directional bias, so to speak. This is part of your, like, hey, I'm looking for this to do its thing, right? I'm looking to capitalize off of this. Can I? Right? So this is what I mean, like anticipating this and the run below above here. Yeah, that's to be expected. Then you have the run above this high here, which the same principles apply. This is a high time frame key levels on a 4 hour, but this is a weekly high right here. It's the weekly high. It's a weekly high. So we have a swing low. Let's magnetize it, right? Didn't need to though. All right, I chose, probably can't tell from here, this high, or this low, at this high. Not eyeballed it, so it could be a little off. It's good enough for me, whatever. Oh, this, yeah, let's get rid of that too. That's what I use for today's, no, yesterday in today's trading. Was expecting that not to be in the chart. I thought it cleared it. It shouldn't have showed on the 4-hour time frame. So I apologize, but we do have an optimal trade entry. We do have a run and a pullback into this imbalance. We have a break in market structure here. We have a pullback. So again, internal range, external range, internal range into this imbalance again, or into this order block. And additionally is optimal trade entry long, running above 1 standard deviation here. And that's part of today's price action, right? So it ran up, pushed up, just kept pushing higher. All right, so that's the 4-hour. Again, it's a key level. You kind of either you want to say it's retesting that key level, or you anticipating some type of retracement. Depends on how the language that works for you, whatever works best for you. Because let's face it, man, if you're starving, I don't know too many people that's gonna help feed you, and especially not long term. A shout out to the people of good that's out there that really prioritize health and well-being for everyone. But anyway, we ain't gonna get into that. Am I done? I think I'm done, bro. I think that's what I wanted to convey. Like, looking at this here and price testing here, this key level. The reason that I went long from Tuesday into this imbalance or order block and push higher. Then you got this imbalance here as well. Not sure if I highlighted that already, but so we have that pull back into this imbalance, push higher. Boom, creating the swing high. Because look, as we have a pullback, I'm gonna call this, it's a pullback, right? In lower time frame, it looks more clear, pullback into this imbalance. And then we have a push higher. But yes, it took out the previous candle's high if you're trading candles, but it didn't take out a swing high. It didn't take out, like, sound like an oxymoron. This is like, if you're trading candles, this is external range liquidity, right? But there's no swing high. There's no three candle pattern here. So you have to swing high here, and then we have a like an upward consolidation, an upward channel here. Takes out this swing high. Now it's took out a swing high. Now where is it going? Yeah, it targeted this imbalance first. Tiny little fair value gap that was used as a support to push price here. But we're now below this candle. It's a lot of things that can happen here. Price can pull back up, or it can pull down back into this imbalance and push back up. Right, but we have made if we are to see some downside action, ideally, because I like retracements, for price to pull back into here, and then either into the order block or to fill up this gap. Or what this is now is an inverted fair value gap, so it needs to, like, if I would be bullish, it would need to hold above this imbalance, because again, this was used as support, and then it fell like with strength. And ideally, as it stands right now, this would be the range. So anticipating a stop, a run up into here. It can trade down into here and then do that, but or it cannot do it at all. So, like, anyway, I think that's all I wanted to mention from here. That's all I wanted to mention, man. All right. سبحانك اللهم وبحمدك أشهد أن لا إله إلا أنت أستغفرك وأتوب إليك. What time is it? All right, 26 minutes. That's pretty good.